Well, good afternoon and welcome everyone for joining us on our webinar today, OTCQX, an international gateway to US investors. Now, the US clearly represents a very deep pool of capital. And what we will be doing today is conducting a case study, and we will be demonstrating how, European companies of all sizes can easily access US investors without necessarily listing on the US exchange. Now, cross-trading on the OTC market allows for companies that are listed on the foreign exchange to basically use their local market filing and disclosure for admission to OTCQX and to QB. And that's actually without any further reporting obligations as well for the issuers. So the foreign exchanges are listed in these local markets here, and also for the broader European exchanges can be seen here. And what we've ensured is that we've included a link to the OTC Markets website where you can feel free to visit to explore all of the qualified foreign exchanges. We will be getting into more detail later on in regards to the ease of access and the benefits of the SEC exemption, which is Rule 12G3 2B.
12G32B, the best record in U.S. capital markets law.
So we'll be discussing that further in the webinar. So before we get started, everyone, just some house rules. So everyone is on, listen only mode. If you have any questions, please use the Q&A button at the bottom right hand of your screen. We will do our best to make sure we answer as many questions as we can at the end of the session. I'd like to introduce myself. My name is Yomi Basharin. I currently work with Area Advisors in a business development role and as a venture finance advisor. And we help, startup founders, funders, emerging growth, and public companies to access pools of capital to launch, grow, and innovate. Today, I'm going to be the moderator, and I'm very delighted to introduce our panelists today. So we have Soren Bartz from Media Games and Invest. We also have Joe Coveney from OTC Markets Group. We have Brad Ferber, who basically represents Casted Rosenberg and Area Advisors. And we have Michael Rosenberg, who's also a partner of Casted Rosenberg. And without further ado, I'd actually like to hand you over to our panelists to introduce themselves. Perhaps we can start with you, Dorian.
Thanks, Yomi. So welcome, everyone. Happy to be here today. My name is Soren Bartz. I'm Head of Investor Relations at Media Games Invest. I am with the company since almost 5 years now. Actually started my career in politics, working for the chairman of the budget committee of the German parliament. We are an European advertising software platform. That means we connect companies that want to buy advertising space with companies that want to sell advertising space. And this is done fully automatic in milliseconds by leveraging AI and data. It's a bit of background what we are doing. We are listed in Frankfurt and NASDAQ Stockholm, so NASDAQ First North. About 70% of our revenues is generated in the US, and also a large part of our employees are based in the US. Yeah, also most of our peers actually are listed in the US, and basically this is the reason why the US is always an important focus market for us, and why we in the end decided to trade our shares on OTCQX earlier this year. Yeah, that's why I'm here today, to share my experience with you, and I'm happy to answer any questions at the end, but now we'll hand over to the next one.
Thank you very much, Soren. So Joe, would you like to introduce yourself?
Sure. Thank you again, everybody, for joining us today, and forward to a good discussion. So my name is Joe Coveney. I am a vice president on the corporate services team here at OTC Markets Group. We are a US-based stock market, and really my primary roles and responsibilities are working with listed companies from the Nordics as well as broader Europe to help them increase their visibility and their tradability to US investors.
Fantastic. Thank you very much, Joe. And Brad, would you like to introduce yourself, please?
Sure. I am an American living in Europe, currently living in Switzerland, and I'm a corporate finance and securities attorney originally from Seattle. Been working with startup and emerging growth companies my whole life, which is my passion, and happy to be part of this. I'm also involved with some non-legal services through Area Advisors, which is how I'm working with Yomi. Happy to get into the discussion here because this 12G32B exemption, it's a fantastic way, as you will see, for non-US listed companies to get access to US capital markets.
Thank you very much, Brad. And last but not least, Michael.
Thank you. My name is Michael Rosenberg, and I'm a banking and capital markets partner at Carsten Rosenberg. We specialize in cross-border banking and finance and going live trading on OTCQX in New York.
Brilliant. Thank you very much, Michael. Now, to start our discussion, I would like to kick off by asking Zoran just to share his journey on trading on the OTCQX market. So over to you, Zoran.
Thanks, Jürgen. Happy to do. As mentioned at the beginning, from an operational point of view, we are heavily exposed to the US. Furthermore, also as mentioned, most of our peers are listed in the US. Actually, almost all of the peers, just a few peers that are listed in Europe. Although we have shown really strong performance in recent years, for example, organic growth in 2021 was around 38%, and between 2018 and 2021, we had a revenue CAGR of 70%. So really a strong operational performance. But looking at our peers, we noticed that there was a gap in the valuation between our US peers and us. This could be due to various reasons, let's say, but one reason could be, that there are more investors in the US who are familiar with investing in edtech on the tech industry in general, which makes it interesting for us to increase our visibility in the US capital markets. As you can imagine, it is much easier to involve, get investors involved into the company when they are familiar with the industry and when they immediately understand what is the difference between you and our peers or the peer companies, let's say. And therefore, it was a totally different discussions we have had with investors in the US, or still have, compared to many investors in Europe, because they don't know the industry as much as investors in the US, which is due to the fact that we have hardly any listed edtech companies in Europe. Yeah, and that basically was the starting point earlier this year. The reason why we started looking at the OTCQX, and then also had some conversations with Joe and his team in the beginning, and then also later with Michael and Brad, tried to understand the trading, what it means to be traded on OTCQX, what are the rules and so on, but what is the difference between the OTCQX and NASDAQ, for example. In the end, there were basically two major points that convinced us to apply for trading our shares on OTCQX. First one, as already mentioned, no SEC registration is required, which also means that we don't have to comply with any additional reporting requirements. Yeah, instead we can just use our existing reporting, which is based on EU regulations and also on NASDAQ First North and Frankfurt Stock Exchange rulebooks. And then we just publish the same information on OTC, which is really fantastic. And what second major point was actually the US ticker symbol, and also that the shares are traded in US dollars. Our experience is now that these things have already increased the visibility of the company in the US. For example, investors in the US can now more quickly find information about MGI, as they are now associated kind of with the US ticker symbol, which resulted in higher visibility, especially also among US retail investors, where I would also include high net worth individuals and also family office and so on. So not only the Reddit users, kind of. Yeah, we are noticing this has increased because we saw increased request coming from the US since our trading on OTC. Yeah, also especially also since end of the summer break, we saw that the trading volume on OTCQX more than doubled on average month to month since then, which is really amazing. Yeah, maybe also a few words to the process. The process until the first day of trading was actually very fast and very structured, thanks also to the help of Carsten Rosenberg. In general, the processes are very automated and standardized, and in total it took us about 7 weeks from starting the process until the first day of trading. But I think Mike and Brad will also go into more detail about how the process looks like and what needs to be done. To summarize, from my point of view, it was really fast and structured, and this was really good and saved a lot of resources. If I compare that, for example, to our listing on Nasdaq First North in 2021, which was a much more extensive process. Also, worth to notice the marketing activities around the first day of trading. Joe and his team supported us with some really nice marketing activities. For example, a press release was published by OTC Markets. We attended the opening bell, which was nice. I was not there, unfortunately, but our CEO and CFO enjoyed it very much. Then we have been invited to a conference, which was also very nice, and also I did a CEO interview, which was distributed via the OTC channels. All in all, a really good start, kind of kickstart, kind of into the US market. All in all, we are very happy with the decision, and would do it again. Let's say happy, as said, happy to be here today. Happy to answer any questions. If anyone is thinking about to do this, also feel free to reach out. Ask questions. But with that said, I would now hand over to Joe, can share his view from an OTC perspective.
Thank you very much, Zoran. So Joe, perhaps you can, as Zoran has said, just share with us what the role that OTC markets play in accessing US investors.
Yeah, absolutely. And congrats, Zoran, again on all the success, and we wish you the best of luck in the future and look forward to supporting you as your U.S. stock market on your journey. So again, amazing to hear. The big problem that we saw is it's hard for most U.S. investors to buy foreign securities. I don't have Swedish crowns or euros in my bank account. I don't have access to a Nordic broker or a European broker. The time zone is different. So there's just all these sort of natural hurdles that U.S. investors have to jump over in order to be able to trade the shares. So if the U.S. market is of importance, how do you solve that, right? You need to be public in the U.S. In order to, facilitate that, you got to kind of evaluate the U.S. capital market landscape, right? So maybe I'll just kind of take a step back. In the U.S., everybody knows NASDAQ, everybody knows the New York Stock Exchange. But then you also have OTC Markets Group. So we are the three sort of main equity execution venues in the U.S. market. From a regulator's perspective, all three of our organizations are viewed through the same lens, meaning we are all considered regulated market operators, providing critical market infrastructure to brokers, investors, and public companies alike. So we operate highly regulated, highly liquid markets. There are over 12,000 securities that trade on the three different stock markets that we operate. And we tier those 12,000 securities into three different marketplaces based on risk, size and scope of the company, levels of verified disclosure, things like that. And I'll just kind of go through each of the three markets real quick. The bottom tier market is called OTC Pink. Pink is historically a place where securities that are dark, delinquent, bankrupt, penny stocks, shell companies all trade. You also have good companies that trade on the pink market that either A, don't realize that they're there, or B, don't understand why they're there. So pink is really sort of more of a broker-driven marketplace than an investor-driven marketplace, if that description makes sense. Because pink is the bottom tier and rather opaque, there's a lot of KYC or AML issues when it comes to trading pink securities, leads to wider spreads, depressed volumes, lack of information. So it can be rather challenging for many U.S. investors to trade pink stocks. To solve those issues, we created two premium tier markets. So climbing the ladder, the next tier up, it's called OTCQB. QB is our venture tier market. It's for smaller, growth type companies, perhaps pre-revenue in nature. And then lastly, the top tier market, it's called OTCQX. QX is our best market, has financial standards and corporate governance requirements for admission. And QX is home to companies like, obviously, MGI, but, other brands that people would recognize like Adidas, Heineken, Roche, Lufthansa, BASF, BNP Paribas, large multinational brands that all trade on our market. We are their US stock market. And the reason why many of these international companies trade on our market is because of this special exemption that's only available to OTC markets. And this is called SEC Rule 12G32B. So this exemption, again, unique to our marketplace, and it allows foreign or non-US companies who are public somewhere else in the world to leverage their local market filings and disclosures for admission to our market. So companies that trade here, and if you have a listing in France, Germany, Switzerland, wherever, you are now eligible to be public on the OTC markets, and you never have to do SEC registration, no Sarbanes-Oxley, no US GAAP. So it really sort of streamlines or eliminates some of the more duplicative or burdensome requirements of a traditional US dual listing. So it makes the whole process, very, very simple and very easy. And now companies in this position have a US ticker symbol, a US dollar share price. They're available for trade during US market hours through all US brokers. And again, the experience is much, much easier and much more efficient being on a regulated US stock market.
Fantastic. Thank you so much, Joe. And part of the process is actually having a sponsor, an OTC sponsor. And I'd like to move on to Brad, who can basically just explain the role of the sponsor and how that works.
Great. Yeah. The sponsor, it needs to be either a law firm or an investment bank, somebody that's gone through and been vetted by OTC as having, qualifications and having relevant expertise in the securities markets. Once vetted and approved, then the sponsor essentially works with the issuer, works with Soren and his team to complete what's known as an application. Essentially, we go through a checklist, we upload all the relevant documents that have been filed. There's some, KYC type stuff, and we essentially just go through the checklist, upload all the documents, prepare an application, sign it, and send it off to the OTC for review and hopefully approval. If it's done, well and right, then maybe it gets approved quickly. If for whatever reason it's not done as well, then you might have to go back and forth once or twice. But what's important is, although what this is it's an application, it's very different from, say, a registration. If, for example, an issuer who is seeking to get access to the U.S. capital markets by registering, that's a completely different process. That's a very labor-intensive process. It's great for the law firms, make a lot of money doing it, but it's a very laborious process. And what you do in that case is you're registering with the SEC, and that not only is it time-consuming and expensive, it's something that subjects you to U.S. jurisdiction for a whole lot of other reasons. So, what Joe mentioned, Sarbanes-Oxley, you have ongoing periodic reporting, that kind of stuff. So what I want to make clear here is the sponsor in this case for a qualified foreign private issuer is simply preparing an application, but it is not preparing a registration statement with the SEC. So that's, I think, for now, I'll pass it over to Michael. Michael, he and I have been working together for several years. And Michael, maybe you could talk about sort of how our firm has invested heavily into data rooms and digitization to make it a lot more efficient.
And thank you very much, Brad. Well, basically, at Carstad Rosenberg, we're a small specialist law firm. We specialize in cross-border banking and capital markets. So we are, as a small firm, very agile, very ideally placed in order to handle cross-border issues. It also means that we're less likely to have an actual conflict of interest when we're actually dealing with the issuers. As a law firm, we're very tech-forward, which also means that for the actual application process, we have a deal room set up, and that deal room will consist of a shared data room and a shared set of documentation with a checklist. That deal room will be shared between all the shareholders or the stakeholders in the application for admission to trading. We will upload all the documentation in the room itself. Once it's finalized, we pretty much just press the button and submit a full application to OTC for review. The application itself will contain all the necessary documentation for the admissions, together with all the ancillary documentation that will be required for the relationship between the issuer and the OTC Markets. In a normal IPO, and all the issuers will have gone through an IPO before the actual admission to training. That process itself usually sucks out all the air of the issuer, and that can usually be quite a hard, difficult process, because the entire focus of the issuer will be focused on this actual process. Now, when it comes to the actual application here, what we actually endeavor to do is to avoid tying up resources of the issuer, because we will basically just use all the information that's actually available from the public filings, from the public registries, and also from the investor relations website, which means that we will actually gather all the necessary documentation without actually using up the resources of the issuer. So that burden is a burden we handle. We ensure that everything fits into the right place. We test the company to make sure that it actually meets the requirements to be admitted to training. And once we're satisfied that it works, and we have dotted all the I's and crossed all the T's, then we will submit the application itself to OTC. Again, we endeavor to do this as fast as possible. We think once the decision has been made, it's important to follow it through in a very, very short time frame. So we are very focused on making sure this is something that happens without any form of undue delay. Once the application has been submitted, together with the OTC sponsor letter, where we confirm that we have reviewed and we have formed the opinion that the company actually meets the requirements for trading or admission to trading, there will be a review period whereby with OTC legal and compliance. And after that, we will have the big day where the company is then admitted to trading in the US. Now, when it comes to the actual OTC trading will happen on the OTC platform, but the actual settlement of the shares will be in the home stock exchange of the issuer. While the shares that are listed, let's say in Nasdaq Nordic, will be traded in the US in US dollars during US trading hours, they will be settled in the home stock exchange of the issuer when markets, and that will be settled in the currency that then listed in. And I think that's quite an important distinction, because what happens here is basically that there'll be a market increase in terms of liquidity, trading volume, and that's because you basically just expand the window for trading for the actual issuer in their home country.
I mean, that almost sounds too simple.
Matt, I just want to add, our compliance team said that MGI's application with Karsten Rosenberg as a sponsor was the fastest and easiest application they were ever able to process because of their data rooms and digital infrastructure. And Michael does a great job of summing up the benefits. I mean, this is designed and demonstrated to improve local market trade volume, enhance liquidity, grow the U.S. investor base. We're trading the ordinary share, so the shares never leave Euroclear or the VPS or the local settlement system.
Well, this actually wraps up the formal part of our discussion, and we've got about half an hour left, and really want to focus on, answering the most obvious questions that I'm sure a lot of our guests would want answers to, but also leaving some time for some question and answers at the end of this session. What are the key questions? I mean, thank you to the panelists. They've explained the process very well. It seems as if you're already listed on a home exchange, you make an application to OTCQX, and you have a sponsor through this, you're good to go. What else is there that we need to know? So let's find out. So firstly, how much does it actually cost to cross-trade on the OTC market?
So this is the best part, right? It's really a two-step process, and the fees are rather straightforward. So step one is you would complete the application, which is helped in preparation by your OTC sponsor. You submit that to our compliance team, and there is a one-time application fee of $5,000, and then the annual fee for OTCQB and OTCQX. QB is $14,200. And then QX is $23,400. And then step 2 is the sponsor letter, which comes from your sponsor. It's a letter of introduction certifying that you meet all the eligibility criteria, that you meet this 12G32B exemption for admission to our markets.
That's straightforward. No more hidden costs anyway.
That's it. I mean, the beauty of it is this is not an IPO, right? You know, you're not registering with the U.S. regulators. So, you know, it's really just secondary trading and opening the door for U.S. investors to be able to trade your ordinary shares.
Okay, well, it seems very straightforward. And again, I guess if you're comparing this to an IPO, perhaps a dual listing, it's going to be music to your ears. So let's find out what the next question is. Typically, how long would it take to get set up an OTC market?
Generally speaking, from application to approval, anywhere from about 6 to 10 weeks. Most importantly, we're going to need all of your disclosures in English. So that's certainly helpful. You don't have to go back and translate, makes things simple. But also, I think relying on qualified OTC sponsors to assist you in the process is certainly important. And Karsten Rosenberg is uniquely positioned with their digital infrastructure tools to make this process as easy as possible for issuers. And, you know, make sure you're maximizing your time and resources in order to bring you to our market.
I mean, I would like to know, Zoran, what was your experience in getting set up with OTC? How long did it take you?
Yeah, as said, it was really fast and easy process. I think in the end it was around 7 weeks for kind of we traded on a foreign market in the US. I didn't expect that this will be so fast.
Wow. So the setting up process was a lot faster than you anticipated.
Yeah.
Thank you, Zoran. So, I mean, I'm curious, Joe, how large does a company have to be to trade on OTC markets?
You know, it really all depends. This solution works across sectors, industries, and market caps. What I would say is the most important thing, and Zoran demonstrated this earlier with his explanation, is companies that have success here and want to be public in the US, there needs to be some type of connection to the US market where it allow you to marry the equity strategy to the commercial strategy. So it could be as simple as employees and operations, customers, suppliers, growth targets, things like that. But having that connection, again, irrespective of what sector or industry or market cap you're in, that connection to the US market is really where it starts to make sense, where you need to be public and, you know, you need to make it easier for US investors to be able to buy your shares.
So I noticed earlier you mentioned the pink market you also have QB and QX. So typically what type of company would join pink versus, QX?
So pink, as I mentioned, is a broker-driven market. And the good companies that are on there that either don't know they're there or don't understand why they're there, you end up on pink because a U.S. broker-dealer can create a ticker symbol on any company around the world that they want without your involvement or your consent based on U.S. investor demand. So a U.S. investor went to a broker at some point in time, said, I wanted to buy ABC shares, but I need to do it in US dollars. I can't do it in Swedish crowns or euros. So, you need to set up this ticker symbol and facilitate the order. The default market for those transactions to happen is OTC Pink. Now, I think kind of flipping the perspective, if you're on Pink, it's a great starting spot because it already shows existing demand from the US market for your shares. And if you take it a step further, and now you own your disclosure, you join a regulated and verified market, you go through the process of engaging an OTC sponsor, you join OTCQB or OTCQX, which are both considered SEC recognized best public markets regulated by FINRA, whereby Pink is not. So you remove all these restrictions that are found on the Pink market. Now the opportunity for success in the US market is truly possible. Couple that with the visibility services that we offer, like Zoran mentioned, CEO interviews, the bell ringing, virtual investor conferences, podcasts, etc. now you've got a full-blown US IR strategy to support your US trading.
Yeah, I would like to add to that the marketing muscle of OTC is actually amazing for issuers. And in terms of actually raising your profile in the US, this is just a very, very easy and convenient way to do this, especially if you have a so-called unsponsored quotation through Pink, which means that you haven't really taken ownership of it, but somebody's actually trading your shares. That means that the information doesn't necessarily flow through it. And this is actually where you should just step in and take ownership of the actual trading by engaging with the process. But the marketing muscle in terms of enhancing your visibility is absolutely amazing for issuers.
Thank you, Michael. I'm sure a lot of our guests are wondering, it's a question that comes up time and time again. What is the risk? Is there necessarily more exposure to liability in the US with the SEC? Perhaps you can all chip in here, but does trading on OTC markets actually expose a company to any kind of liability with the SEC?
Yeah, I'll jump
let's
in.
Let's have the lawyers answer first.
Yeah. So as I was explaining before, there's a big difference between applying to have your shares tradable with the OTC markets, where the OTC is essentially saying, you meet our 12G3-2B exemption, and you have you're listed on a qualified exchange, i.e., we respect the market, the non-U.S. market, as having integrity. Even if it's not an American one, we know that there are great markets outside the U.S., so on and so forth. Now, when those shares are approved for trading in the U.S., you are not doing what I mentioned before. You're not registering with the SEC. That is to say, when you register with the SEC, it's a pretty big deal. You are consenting to their jurisdiction. You're agreeing to comply with a whole host of rules, depending on whether you're a domestic or a foreign issuer. And ultimately, you're subject to all the rules that any other reporting issuer registered company is in the United States. Now, the question that has been raised is, okay, simply by virtue of having the shares traded through OTC, am I increasing my legal liability? And it's a great question. And it's one that we've had lengthy discussions with the OTC market general counsel and internal counsel. And none of us are aware of any instance where a company has been sued in the United States solely by virtue of having their shares quoted on OTC. Now, having said that, fraud is fraud. And if it's fraud in, say, Germany or Sweden, it's probably going to be fraud in the United States. So you're never going to be immune from fraud. The anti-fraud requirements are going to always be applicable. But I guess that at the end of the day, the concern or the fear that sometimes exists that prevents, foreign companies from maybe wanting to list on, say, the New York Stock Exchange or NASDAQ, it really doesn't, the data doesn't support any suggestion that your liability is in fact increased solely by virtue of doing that. So it's a long-winded answer of saying it's pretty much business as usual in your home market, with the exception of fraud. Fraud is fraud.
I think Brad really sums it up nice. And, because we are a stock market and not a stock exchange, this is not a listing per se, right? This 12G3-2B exemption, we're always going to rely on the home market rules and regulations. And companies that are on Pink who upgrade to OTCQB or OTCQX, this is often seen as a proactive risk management tool, because now you're being transparent in your disclosure, you're demonstrating good corporate governance, and really, putting best practices, best foot forward in terms of owning your U.S. quotation and your U.S. trade. So, yeah, if you're on Pink and you're already quoted here, what's that doing for you? by virtue of you kind of, sweeping that under the rug or saying we're not involved in it, the opposite is true, where if you join QX and you embrace it, I think through the power of disclosure and transparency provides a good level of protection for foreign companies.
Well, I'll just sort of chime in there because it's something Michael addressed as well. I'm an active investor myself, both with U.S. domestic companies and foreign companies. And given the way that the OTC takes the information and distributes it, and the way the U.S. markets, whether it's Yahoo Finance or Bloomberg, the way they suck that up and populate it, for companies that have gone through this process with a U.S. ticker symbol, if you're, somebody really anywhere in the world who pushes that ticker symbol in, boom, all of a sudden there's just all this information, and information is a good thing. And so it really does enable the companies that, like a Bloomberg or like Yahoo Finance, to create a complete picture about this company, even though it's not a U.S. listed company.
Right.
You want to comment on that, Joe, a little bit?
Yeah, you're right. I mean, just because you're public in the local market doesn't mean that all U.S. investors are receiving your material news and information. Most of the vendors that you mentioned really program for U.S. ticker symbols. And when you look at our market, Pink QB and QX, Pink data is not widely available, whereby QB and QX data is consumed by all the major U.S. financial media and research outlets. So it does help organically get your information out there and be transparent in your disclosure.
That's really great to hear. In fact, that leads me on to final question before we go on to Q&A. But it's about the rise of the retail investor, the US retail investor. And it would be really good to get a perspective from Zoran on this as well as you, Joe. And perhaps, Brad, you can also chip in as a US investor yourself, what this really looks like from your perspective. Joe, could you start off by answering this question, just in regards to what can you tell us about the rise of the US retail investor?
You want to start, Joe, and I jump in?
Sure. I'll keep it brief because I think your perspective as the issuer is obviously a bit more important. But, we're the stock market, so we service institutions all the way down to retail. The rise of the retail investor, especially through sort of the craziness of the pandemic, I think just speaks to sort of the depth and breadth and diversification of the entire U.S. investment community. So making it easier for all U.S. investors to be able to buy your shares with a U.S. ticker symbol, U.S. dollar share price, that's really the catalyst that allows foreign or non-U.S. companies to be able to tap into this demand. U.S. investors, especially on the retail side, can create movements and they can galvanize, share prices and sort of activities. So making sure that your information is out there and using our market as ability to be able to freely trade the shares, I think is a great thing.
Yeah. So from your perspective, U.S. Retail investors are pretty similar also to Swedish retail investors. They are super involved or highly involved with the company. They have a lot of information. They kind of exchange this information. Most important, what we noticed is that they are mostly really long-term oriented and super supportive with the company once they decided to invest in one company. And we saw that during the last month. So I think everybody noticed what happens, especially to edtech companies. There was a lot of pressure on the shares and on the equity side. Also on our company, saw a lot of selling, but so around the industry, not only this industry, but what we really saw is that the retail investors, that they still support the company and still believe and looking long term at the company. And for me, this was a bit surprising during the last months. But I think it's really great, and it's important for us as a company, also for us as an investor relations team, to also recognize this and to pay attention to retail, as this is super important, and they are much more educated now. As said, say also heavily connected amongst each others, but also with the companies and so on. And we saw that in Sweden, and we have the same feeling about US retail investors.
Hey, well, before we go into Q&A, Brad, did you want to touch on anything?
Well, yeah, I guess I would just sort of add, I mean, my perspective working with startup and emerging growth companies, public companies, really around the world is the mindset of a U.S. investor, and I would say, as Soren pointed out, Swedish investors are similar, is a little different in the sense that I think in the U.S. there is a huge demand and appetite for innovation. And so if you're a U.S., investor and you're saying, okay, well, people innovate all over the world, companies are innovating all over the world. If it's a non-U.S. listed public company that actually has innovation, I mean, I can't back this up with data, but I think anecdotally what I see, especially in the private markets, but I think it's true in the public markets, is those kind of companies will be very interesting to U.S. investors. If it's an industry like MGI is, the U.S. market kind of already dominates, namely the ad tech space. Obviously, it's not a big stretch to understand the foreign company because it's similar. Maybe there's an arbitrage, i.e. a valuation arbitrage, but also I would say in biotech and in innovation in general, the U.S. market just tends to place a higher value on that. That's my personal opinion. Does anyone else want to add to that or debate that?
Thank you very much, Brad. So I'm going to just find out what some of our guests would like to ask the panelists. So one of the questions we have here, are US investors interested in European listed companies operating only in European countries and not the US?
Tough to say without knowing more. But what I can say factually is the amount of US dollar investment into European listed equities has increased year over year by 15-20% for the last 15 years. Given sort of macro conditions today and the divergence in valuations between European companies to US companies, I certainly think that there's attractive price points for entry for US investors looking at Europe for alpha and diversification. And we are seeing more US dollars go into European markets in terms of investment. And hence, more companies from Europe and around the world are joining OTC to tap into that demand.
We have another question here. Who are the main market participants on OTC Market? For example, is it mainly individuals, family offices, or also institutional investors, mutual funds, etc.?
The short answer is all the above. We service the entire U.S. investment community. There are close to 100 U.S. broker-dealers that make markets on the securities that trade on our three different, on Pink, QB, and QX. And these broker-dealers service Tier 1 institutions like State Street, BlackRock, Vanguard, Fidelity, Tier 2, Tier 3 institutions who may not necessarily be able to trade in foreign markets or don't have a foreign mandate. And non-U.S. companies need to be here to tap into those investors. High net worth individuals, managed accounts who absolutely need the compliance that is found on OTCQX and OTCQB, not OTC Pink, as well as U.S. retail who needs the U.S. ticker symbol, much like we just discussed. So really, it's the entire U.S. investment community to sum it up.
Thank you for answering that, Joe. We have a question here. Do you need to be a publicly traded company to start with?
Well, I mean, one thing is for sure, that is, in order to be traded on OTC QX or QB, you will have to be a publicly traded company that is on a qualified, recognized stock exchange somewhere else. Right. And there may be a misconception here that this is actually a backdoor to a listing, which is not. It is solely an extension of the trading window that will be available to your already publicly listed shares somewhere outside the US. while you are already publicly traded somewhere in the world, you do not have to enter into a process of actually being dual listed. You can basically just have the admission to trading on the OTC markets, which will then expand the window for US investors to actually trade in your shares during normal US trading hours, which may differ significantly if you're based on the West Coast as opposed to shares that are quoted in Helsinki or Frankfurt or anywhere else in Europe. So that's the important thing. But yes, and in order to be admitted to trading, you need to be publicly traded somewhere else on a recognized stock exchange.
Yeah, I think Michael's answer is in the ballpark of what the question was. And just to add to that, the best way to think about us is we're like a gateway or an access point for U.S. investors into the local market, almost like a U.S. dollar user interface, if you will. It just makes it a lot. We're trading the ordinary share, so it just makes it, albeit represented in U.S. dollars, so it just makes it a lot easier.
Yeah, one last point may be that this is not a primary offering. That is to say, the company's not selling securities that are newly issued. This is just facilitating secondary trading, and in this case, opening up a whole new market, namely the U.S. market, to expand that secondary market.
We'll take a couple more questions because I'm conscious of time. We have 5 more minutes. One question here is, doesn't it make the shareholder identification process more difficult?
So the way the shares show up in the registry is most U.S. investors will show up in nominee accounts as sort of the street level name. What I mean by that is, I use Charles Schwab, right? So it would be Charles Schwab held in custody by Danske Bank or DNB or some other local custodian. And that's how it would show up in your registry. It would show up as one investor. There may be underlying investors underneath that, but it would show up in the street name. In terms of institutions, you'd be able to see the institutions' names. We're trading the ordinary share. So U.S. investors who buy through OTC, they'll be treated like any other ordinary shareholder per local market rules and regulations.
Real. Thank you, Joe. A question here, actually, I'm staring a little bit away from Europe, is asking, do you see any interest from Asian companies, recognizing that it is a very broad term?
Actually, yes. We just opened an office in Singapore. I'm only one small piece of kind of the entire corporate services business. I'm focused on the Nordics. I have a colleague who's based out of London who is doing the same thing I do, covering UK, France, Ireland, and Germany. We just opened up a Singapore office. She's doing Southeast Asia. We have another colleague who's focused on Australia, another colleague who does Canada. We have hundreds of Toronto Stock Exchange listed companies that trade on OTCQB or OTCQX. In fact, there's about 600 companies on QX, 1,200 on QB. The vast majority have a primary listing somewhere else in the world and utilize this 12G32B exemption to be public in the US and to make it easier for all US investors to buy their shares.
Well, we have run out of time. So we didn't manage to get through all of the questions. We did have some questions come through the registration, and we still had a few question and answers, but unfortunately we have run out of time. But feel free to schedule a free consultation with our area advisors. We'll be more than happy to answer any questions you have about the process. I do want to thank our panelists. Thank you very much for attending. And, Zoran, thank you so much for sharing your experience and your story. And I want to thank everyone that was also listening. And I also just want to thank you all for attending.
Thank you.
Thank you, guys.
And thanks. Bye.